All right, guys, welcome back. Today, I want to walk through a few charts and explain the technical reasoning behind some of the trades that I took recently and also what I'm watching going into this week. We're going to quickly start with oil using USO and then I'll break down the ELPW and AIFF. So, before getting into the individual trades, let's start with oil. If you remember from my last video and in the Discord, I mentioned that there was a strong probability that USO could move back toward the local highs around 119 to 120 area. And that's exactly what we saw happen on Friday. The move was largely driven by Middle East tensions, which pushed oil prices higher and created the momentum move into resistance. Now, if you look at the chart here, you'll notice that the 119 and 120 was a very important technical level. That area marked the previous local highs, so naturally that's where we expected the market to react. And as expected, once price pushed into that zone, we saw a rejection. That's pretty normal behavior when a market runs directly into a major resistance level after a strong move. Right now, the move looks like it's going to cool off slightly here, and the next level I'm watching is around 114. That level has acted as support previously, so if price pulls back into that area and holds, that could create another opportunity for a bounce. So once we start approaching that 114 zone, that's where I'll begin looking again for scalp opportunities in oil-related stocks. Because when oil starts bouncing off key levels, energy names tend to react very quickly. Now let's talk about ELPW because this one was a really clean setup. I alerted this trade on March 12th at 471 and my initial target was $5.50. Now, the reason for that target was pretty simple. When I'm looking at a chart and I don't see any clear resistance levels on the higher time frame, like the 4 hour or the daily chart, I usually start by targeting a 15 to 20% move as an initial objective. Now, in this case, that made even more sense because ELPW had just gone through a reverse split, so there really wasn't many reliable local highs on the chart to work with. So the trade becomes more about momentum and structure rather than traditional resistance levels. The setup itself was a downward trendline breakout, which is one of my favorite patterns. Usually, what I want to see is a multiple pivot points forming along that trend line, ideally somewhere between 3 to 5 touches before the breakout. Now, if you look at the chart here, you'll notice that the first breakout attempt happened around the third pivot point. It didn't quite break out yet, and we only had a few 1 minute closes between the candles. So the stock pulled back and started consolidating again under that trend line, building more pressure. Then within about 30 minutes, we saw the fourth and fifth pivot point form, which showed the consolidation had tightened enough for another breakout attempt. Another factor was overall market conditions. Now, at that time in after hours, we did not have a lot of momentum names running. And when the market environment is like that, these breakout setups tend to work much better because liquidity and trade attention flow towards nice technical setups like we spotted here. So with the five pivot point structure, the tight consolidation, and the momentum environment, I went ahead and alerted the trade right at $4.71. And then we got exactly what we wanted to see. The stock expanded all the way to 639 in the same after hours session, which was a very strong move from the breakout. Then on the following session, March 13th, the stock actually provided additional day trading opportunities. We saw another trade set up in pre-market and then again during regular hours on a sideways flag breakout. So there were multiple opportunities on this name after the initial alert. Now, heading into next week, the reason I'm still watching ELPW is because the stock never had a full breakdown. So if momentum comes back into this name, I'll be watching for a potential move back toward the local highs above $6. Now, at this point, I've already scaled out most of the position and only have about 25% position remaining. So the rest is essentially letting the trade work if we do get continuation. Overall, this one was a clean, roughly about plus 35% move from the alert, which is exactly the kind of setup I look for. Now, the second trade I want to talk about is AIFF, and I alerted this one right at the open on Friday at 195. The reason was the 15-minute chart was sitting directly on support, and since this was already a recent runner, we had very clear local highs and lows to work with. When a chart has that kind of structure, the trade becomes much easier because the levels are already defined. So at 195, the stock was essentially holding support and stabilizing, which created a very clean risk to reward setup. Now, initially, the stock took a little bit of time before the real momentum started, as you can see here. But the key level I was watching was the resistance around 215 to 216. Once the stock broke through that level, that's when the momentum really started to accelerate. From there, the stock ran to 270 and 282 during regular market hours the same day. Then later in after hours, we saw the move continued and we saw a high of $3.08, which actually hit my original target. Now, the obvious question is, why was $3 the target from a 195 entry? The answer becomes clear when you zoom out to the daily chart. That's a very clear supply zone around the $3 level, which was the most important overhead resistance area on the chart. So the trade idea was simple, a move from support into that daily supply zone, and that's exactly what the stock did. Once price pushed into that area, we saw a clean rejection off that $3 supply zone, which is very typical behavior when a stock runs directly into major resistance. Now, at that point, I booked about 75% of the total position, locking in the majority of the move. Now, from the 195 entry to the $3 target, that was roughly a 57% day trade. Now, looking ahead, the major level on the daily chart sits around $3.59, which would be the next potential profit zone. But for that to happen, the stock first needs to break and hold above $3 to $3.10 area. So going into this week, I'll still be watching AIFF for possible continuation, but it's important to remember that 75% of the total position has already been booked on my part. So the remaining position is essentially riding a profit cushion. As long as the stock continues to respect the demand zone between 230 and 250, the structure still looks pretty healthy. Now, if that area holds, we could see the stock build up for another expansion phase toward the $3.50 region. All right, guys, that's it for today's breakdown. Let me know what you're watching this week, and I'll see you in the next update.